Hello everyone, this is Al Hill, co-founder of TradingSim.com. To simulate the lesson that we're going to cover in this video, please visit TradingSim.com or give us a call at 888-610-2734. Hello, this is Al Hill from TradingSim.com. Today we'll be discussing day trading with price and volume. Looking at price and volume is the oldest method for analyzing the market. There are no magic indicators, there's no magic buy or sell trigger. You are truly looking at how the stock moves and how buyers and sellers react to that movement. So let's quickly go over the rules for day trading with price and volume. First is the price moves in the direction of the primary trend. You want to see volume accompany that move. So if the stock is going higher, you want to see price go up, and you want to see the volume also go with that move. This implies that buyers are in the market. Conversely, the market is going down. You want to see more selling pressure as the stock goes lower, which implies that people are looking to get out. Second point, each counter move to the primary trend should do so with lighter volume, meaning if the stock is going higher and then it starts to pull back, the volume drops off because there are less sellers because people really just want to buy the stock. So you're really just waiting for the next opportunity for the stock to move up as sellers get tired and buyers move back into the market. Thirdly, once the volume for a counter move matches or exceeds the last swing high or low, the primary trend, it's a clear sign that a potential reversal is in play. Now this sounds pretty complicated, but basically what we're saying here is if a stock is moving higher, each high you're coming in with significant volume, and each counter move or move lower has lighter volume. Once you see that counter move coming with higher volume, that's one of the first signs that the stock is weak and can potentially break. All right, the last rule here can be kind of tricky, but basically what we're saying here is that if you have an established trend line, for example, let's say you have an uptrend, and the stock starts to hit the bottom of the trend line, but it brings in heavy volume, which really you want to see the stock, as I said earlier, you want to see the volume drop off when these counter move. But if you see the volume pick up and then the stock shoot off of that support line, then that means that buyers came in at that point and bought the stock, which is actually a good sign that you had higher volume on a lower price, right? Because the buyers came in and supported it. So you have to see the price go up. All right. So now we covered the four rules. Let's get into the chart. All right. So in this example, this is First Solar. You'll notice that I constantly use First Solar a lot because First Solar is a really volatile stock and it gives you a lot of good swings. So we'll want to draw the trend lines or trend channel for First Solar. That's the first thing we want to do. This gives you an indication of how the stock's moving. So we use the Richard Wyckoff method, which basically means you draw parallel trend lines. You don't try to draw trend lines all over the place and really clutter up the chart. So this is our supply line, meaning this is where sellers come into play. This is our demand line, or where buyers come into play. So here you can see that the channel started with high volume. So this drove the stock up in price and is a clear indication that now the price action is to the upside. You can see here you had downward movement in volume. Now you have upward movement in volume. As the stock drifted lower and had its retracement of this up move, the stock did so with lighter volume. You can see this here. Let's clearly indicate this. Let's apply just so you can see how the average volume is coming in. All right, so you have volume coming really high. Now you can see that the volume is much lower. And you're testing the line, and kind of what we said a second ago in our fourth rule, at the support level, you can see volume picking up. This implies that buyers are coming in. Now the stock shoots off of the support line, goes up to the supply line or the sell area with higher volume, which means again the stock had a strong up move, which implies that the stock is still in an uptrend. As you can see here, the stock drifts lower, back down to the demand line or buying point with light volume again. Great sign, meaning that sellers are not really looking to get out of the position, or longs rather. Okay, now again at the demand line, volume picks up again. Boom. Stock comes up, but you notice the price did not move as swiftly as it did here. And also you really had one peak bar of volume come in and then the volume dropped off. This is your first sign that there is a problem. All right. You have a spike in volume, yet you don't have a lot of price movement. And then after that spike, volume goes flat, price goes flat, and you go right back to the demand line. So if you enter the position here, let's say you entered here as volumes dried up at, you know, 23 and change, you had a good run up to 25, right? So really good run here. This pullback, you sit tight because again the volume's not coming in. You pop up here. This is your first opportunity where you're going to start to want to put in your stops. You know, beyond just your break even stop or your first stop loss order when you enter the trade because you know something's up. All right, let's keep analyzing this. So then the stock actually floats outside of the support line, which is another indication that, okay, something's going on because buyers should come in and provide support here. Well, they don't. All right. And then volume picks up, but it picks up with red candles, which implies sellers have all the control. So volume picks up. All right. Now the stock reacts and tries to make a run back up into the channel to imply a false break to the downside. But as you can see, the sellers came in heavy. Look at the volume here. Came in heavy and broke it down. All right, this is a point where you want to exit the trade and actually contemplate getting short. And as you can see here, once the support was lost from the demand line, once the buyers could not push the stock back into the trend channel, the stock then had a break, and you can see the volume picked up here on this break. All right, so I know that's involved, but honestly, it's probably the best, if not the best way of analyzing the market because you're not consumed with indicators. Just because something's overbought or oversold means nothing because this trading is based on human emotions and things can always go higher or lower. But it also requires you to actually own your decisions and own the analysis that you're performing. All right. So if you have any further questions, please have a look at the article that we've written up on this. And also feel free to give us a call or shoot us an email. Good luck trading.